Let's talk about Oracle now. It remains the quieter alternative for cloud business, maybe. It's not so quiet, though. It may not have the flashier margins of its peers, but it could see upside from AI chatbots, even as the industry remains pressured. Let's get to business class Brad for more on Oracle's position in the cloud infrastructure landscape.
Yeah, thanks so much, Julie. Well, yes, I'm taking a look under the hood here at Oracle this morning. Ticker symbol ORCL. Yes, ORCL, everyone. It's very clear here. All right, so Oracle here. This company has had a big 2023 thus far. 2 new firms initiating coverage this year. It's up by about 5% year to date. D.A. Davidson, they initiated coverage with a neutral. Mizuho initiated with a buy and a $116 price target. Plus, they also caught 2 upgrades, one from Jefferies, from hold to buy, and one from Piper Sandler with a neutral to overweight upgrade there. And particularly here, one thing that Mizuho stated within this, investors may be underestimating Oracle's potential over the medium term to generate solid top line and cash flow growth and exceed some of the fiscal 2026 targets of $65 billion in revenue. Now, they go on, but here's what I want to get into for our SWOT analysis: the strengths, the weaknesses, the opportunities, and the threats in hitting some of those targets that Mizuho had put out there, as well as the rest of the street is looking for. So in the strengths category, one thing that I'm looking at here is the cloud, and particularly on the cloud, the infrastructure cloud. This is seen as one of the more superior offerings in the market here. Performance, security, and the reliability as well is one thing that constantly gets brought up in some of the net promoter types of conversations from customers, and more broadly in comparison to some of the other offerings that are out there on the street. Now, this was evident, of course, you look through some of the earnings that have come out most recently. Past quarter here, cloud revenue, that was up by about 48% here. And even if you strip out Cerner, it still came in up by about 27% for the total cloud revenue growth there. So that a net positive or a strength there for Oracle. However, one of the weaknesses is in this competitive landscape, pricing strategy is one thing that Oracle is going to have to get right. And when you think about that pricing strategy and going up against the other players in this cloud space, that could impact their gross profit margins. Now, they hit 76.1%, and that was the last 12-month figure. That was down, though, from 80%. You think about that a couple years ago is where that stood. And so that is going to be one area to keep a close eye on here in the near term and moving forward. We'll see what the company says on that. When they do report earnings early to mid-March is when those results will be coming out. However, one of the opportunities here, and you may have gleaned some insights just a week ago, when NVIDIA reported earnings. They came up in that call because I think about AI, artificial intelligence. Sure, it's a buzzword, but in the company that's been able to create an as a service of anything, why wouldn't we see AI as a service in the future? And for Oracle, already having artificial intelligence or being one of those core CSPs that really is able to already take advantage of or leverage the NVIDIA DGX Cloud, which is their artificial intelligence play. That was a shout out. That was key on the NVIDIA earnings call here. And then additionally, got to talk about one of the threats here. And this is deals on 2 fronts. Number 1, deal scrutiny on the first front, elongated sales cycles. You've heard about this on multiple ERP or cloud collaboration suite type of companies. Workday, this came up on their call. Sale also came up on the call of a company in Zoom who we spoke to here on Yahoo Finance as well. And particularly what this elongated sales cycle could mean is that you still see some of the deals that they're looking to net out or getting pen to paper and signed off on struggle to fully get across the finish line or take longer to do so. So that could impact some of the results in the near term. But then you also think about the acquire to grow strategy on another side of deal scrutiny. Investors are going to be thinking of this deal scrutiny as how much are you paying within this acquire to grow strategy that has really been popular across the ERP landscape and for some of the broader cloud solutions companies in the market. So that is something that I'm keeping an eye on. Deal scrutiny on 2 fronts as the major threat here as of right now. But moving forward, as of this point in time, it seems like there's still a ton of optimism out on the street with regard to Oracle. We'll see what the company does when they report 3rd quarter results in mid to early March, Julie.
Brad, business class Brad, remind me what ERP stands for?
Enterprise Resource Planning.
Thank you. Thank you very much. Okay.